Hello YouTube! Today the S&P is closing out with a hammer. It is closing higher than it opened. And this is snapping a 4-day losing streak, one of the worst ones we've had so far this year. We can also note that we are now inside a huge supply and demand zone. We note that we are back to the area where we were having the most, again, the historic shorts that were coming in from starting at about 411 down here to about 370. This is going to be the most important area for me right now. I have now revised my daily chart, and I think it's really important for us to understand how markets move, because yesterday we hit a low of 395.04. Today we hit a low of 390.04. That 0.04 area is exactly where we bounced for the last 2 days. And we can note that we also made it all the way back to the low from August 30th here at 396, which is basically where we closed. This is also really notable because we opened up a new month. That's right. So there was actually a gap on the monthly chart, which is extremely unusual. We almost never see gaps on the monthly. The last time we actually saw one of these goes all the way back to November, which was when we had that gap above the 400. Actually, no, this is a gap here at 360. We left a really small gap here on the monthly chart. We did fill it and then went higher. So although we are now green, is this going to signal more downside like it did, again, on the opposite side when we were back here in November and December of 2020? I don't know. But for today, we're going to rejoice because these bulls got some relief. Yes, this is a relief rally. This is not a reversal. For us to reverse, we can't be pointing down. We can't be below the short-term average. But there is some pressure building up. And there were some very clear signs today that we were going to get a little bit of relief. I now want to look over here at QQQ, and QQQ is going to show us kind of the same thing, where we can note that we closed green by 13 cents. We'll see if it holds on the MOC into the next 9 minutes here, but that's a massive hammer, and the low here is 292.95. The key area that I saw us battling for a large part of the day was going back to our gap here at 294.87. So here we're looking at the pink box. The pink box on SPY has now been expanded, but it's important to note that QQQ has now made it back up here to the high. The high from the gap is now going to be 299.23. Where did we close? 299.4, which means we saved it. Yay, bulls. Whoop. We saved it. If we now go back to SPY, we can note that, so that means if we were tracking here, S&P would be at 401.44. We're not quite there yet. Again, we're looking at the gap from June 9. So this level is so important because if we think about this, how was the bottom of the year created? It was created by this overwhelming desire to want to start shorting the hell out of the market on June 9, all the way down to June 17, or roughly over a week and a half. Then after the pressure is done, everyone shorted it. What happens? We start to fade back up. So everyone who shorted it started to go a little bit less green, again, more green, less green, and then eventually we get over it all the way up, which means everyone who shorted inside of this area lost. And now as we re-enter the gap, what is going to be so important for me is how we act around these gap areas, because it's pretty much going to signify our P&L, or our profit and loss. Another way to look at this is actually by going here, adding in the volume profile, and then just noting where the supply is. If we hide all the trend lines and just look here purely at the volume profile going back to early June, again, when we formed the low of the year, what happens? Oh, here we go. So if we can actually make it back above roughly 400, we can probably snap back up to 412, which is a really important area as we've gone over on the monthly, on the weekly, and again, also on the daily here. So that's the level I'll be watching for. We're now at the top end of the supply and demand. If we can make it over 398, we're probably going to squeeze up to 408, if not higher. So it's really important for us to keep that in mind today. Second thing I want to look at here, or the next thing I want to look at, sorry, we looked at QQQ, we looked at SPY, but what is actually driving this? Well, I actually want to give a shout out to Mason, who actually called this out on our pre-market stream, and we went over a lot of these notes on our stream this morning, but also I laid a lot of this out on Slack. I actually made a very nice trade today, and there was really good signs here. So if we notice what's happening here at the 50 DMA, we noted that SPY and QQQ have now closed below the 50 DMA for 2 consecutive days. That is almost always going to lead to more downside. So this is not looking really good, but there could be some short-term relief or a trap. Again, QQQ now closing below for those 2 days, also signaling that it's now getting some fresh bear momentum. What is missing? Well, the last generals. The last generals are the trillion-dollar companies. NVIDIA definitely provided a very sour note today. However, what's closing green? Apple, Google, Amazon, Tesla, Meta, all closing up. And it's notable that Apple is actually back above its 50 DMA with a hammer, opening up almost perfectly on that area. So if we now go back to Apple, we can note that, yes, Apple is still above its 50 DMA. Is this enough? I do not know, but it's a good start. Next one we're going to look at here is going to be Amazon. Amazon, exact same thing. Open on the 50, put in a tail, and rallied up. Last one, Tesla. Open on the 50, push down, rallied up, closing at the high of the session. Is this enough to offset all this red here? I do not know. I don't know. What I want to look at next is going to be what we're going to be looking for in terms of whether or not we are getting, again, relief or a reversal attempt. So for Apple, Amazon, and Tesla, I'm looking really close here to, I'm actually going to remove all the lines, then we'll put them back. I'm looking right here to the day where we took a day to pause, right? We get close to the 50, we actually go below on overnight, meaning on ES and on NQ, and then we just fade it the next day. So what I'll be watching for is whether we get a gap up into tomorrow, and if we do, how do we react to it? It could be just fresh liquidity for them to sell into. It could also be a short-term reversal where the broader market, meaning the S&P, might want to close out here at about 400 tomorrow. So if we close at 400 tomorrow, there is a level on the options chain which tells us that that's really important. And if we go here to our weekly chart, actually, do I want to show this? This is the area where I identified the reversal, and I shared this in our chat room. So I was looking here at this image, and this is pretty much when we reverse. So I'll go over this for 1 or 2 minutes, and I'll explain the reason why I think this happened. So this was shot here at, I don't know what time this was, roughly 1 o'clock, just after lunch. We were forming a reversal pattern here, and now if we look back, oh goodness, when we got over the VWAP, and we reclaimed the opening of the bar, meaning the opening of the day, that's when we started to shoot up. And it was a pretty nice rally. So after we reclaimed the gap area, we bounced up, we started going higher. And that's how we went from roughly 391 up here to about 397, or roughly a 1.5–2% rip. And what that really led to was us reclaiming the VWAP and then printing an hourly higher high. So hourly higher high got formed here at 1 o'clock. And then boom, that was the release. We were unable to form a higher high ever since 6 a.m. this morning. So momentum goes to the downside. We start building up steam. It starts releasing, and then it gets released. So the reason why this is so important is because going into tomorrow, we're going to be getting a really big data point. So I was looking for a reversal. Again, I think my target was already hit, actually. So I made a nice little scalp, bought it at 39.20s, exited my last one at 39.60s, and we'll see where we go from here. But the reason why this is important is because we're now noticing we have a short-term trend change. However, there's a big caveat here. And the caveat is that, at least on the E-mini futures or ES, every previous time we form a small uptrend and we're over the VWAP but then reject off the blue line or the 50 MA, there's our stomp. Small uptrend, touch the blue line, not even quite make it, there's our stomp. Now we're flattening out. We got a reversal attempt here. So what's happening? Well, we're trying to change the trend. And our first key relative low also aligns with our 50 MA. So how we open tomorrow and how we get prepared going into Payroll Friday will be really important. So now we want to talk about what happened today. Fear and greed went down to 43, now back up into neutral, which means the market's not convinced we're really bearish yet. For me, if we get a weekly close below 405 on SPY, for me, that's bearish. That's what I said on the weekend, so I got to respect my notes. Anyways, looking at what happened today, healthcare is up, and honestly, I don't really know the reason why. It kind of seems like we heard a poll today that the Democrats are now actually looking pretty good. Joe Biden's now at, I think, 45% approval. So I think, again, not that I know, I think, if I'm trying to understand what's happening here, people are getting ahead of the Joe Biden midterm move, which might be healthcare. It might be some green stocks, God forbid. And that's what it seems like. I don't see any other reason why healthcare should really be going up when we got the virus pretty much behind us. So now looking at why today was notable. Well, we got a crush on the ISM number. This came in strong, came in the same as the previous reading. And this just shows that, again, we got less jobless claims. We got strong manufacturing. Good data should be negative. And the fact that we came all the way down to 390, but then bounced, tells me that good data was interpreted in a bullish manner. And this is so important because the low going back to June 10th is 389.75. Our low of the day, 390.04. So these bears were motivated. They had the catalyst. They had NVIDIA. They had everything going for them, but they could not crack or break the chart. So if they can't crack or break the chart at a key area, the question is why? And that's the big question. So why couldn't they do it? I believe it's because we're already down by, I don't know, like 9.5% off the high, 9.7. That's basically a correction. So 10% off the highs, that's a correction. It's a natural spot to be taking some profit off the table. It also goes back to where this pink arrow points to, or again, where people were shorting the hell out of the market. So if all they want is their money back, they're like, oh man, I went from green to really big green to red to redder, and then I want out. If this is going to be the theme, we're not going to really see us test the lower bound. If we do, it means that big nasty short, couple $100 billion on ES, including other markets, is likely not going to come to fruition. So now what I want to look at is, again, even before we had this move, I was looking at a technical level. Yesterday, we looked at the options chain for motivation. And now today, can you see a reason why we didn't really go lower? Yeah, there's open interest down to 385, but there's 400,000 puts at 390. So if they let it below, like that like really stings. We got open interest at 395, at 400, and there's volume really only starting at about 393. So all these today, meaning all the puts, smoked. And on the call side, this is where things are going to get interesting. So again, I have a theory on where we're going to go for tomorrow, which I'll share in a moment. But where's the fat stack today? Well, the fat stack today is at 395. However, the open interest is really muted. So for a clue for us, even before we get the payroll number tomorrow, was going to be, are we actually seeing conversion from volume into open interest, or was it just a trade? If it was just a day trade, we will not see these numbers get bigger. They'll stay the same. There's going to be almost nothing over 10,000. On the put side, if they've been closing these out, these numbers will reduce. So for tomorrow, again, if these numbers convert to open interest and we also get a positive reaction to the payroll Friday, I could see us going back up to about 400. But it's not going to be a straight line there either. So for me, what I would expect, again, not that I know, would be a gap down pump up. And I say that because if now the goal is to see if these bears are going to try to stomp it back down fresh, we got to give them a chance. We got to give them a chance to do it. And if these calls over here are too deep in the money, then we try to gap it down and then pump it up tomorrow to let it close at about 400. And the reason I say that is because when I do the math here, I look at 395. So these 395s, again, up until about the last roughly 10 minutes, these are worth about $2. So $2 plus 395 is equal to what? It's equal to 397. It's almost like they're buying the lower strike to protect what they've sold out of the money. I think so. And then if we look at the 397s, which is the other really big volume here, these are worth about $2. What's the break even on that? 399. So I think this is also then protecting this level here at about 400. So if we're able to start going back up tomorrow to finish off the story here, and we go back here to our weekly chart, because again, we're getting a lot closer to the end of the week now. Let's delete that tiny little line on there. Let's ask ourselves, what would a 402 close or 400 mean for the S&P? Well, we're opening at 402. Closing at 400 or right around max pain in the 50 DMA means that we're going to be closing down by 0.5% on the week. And that is really notable because the big culprit today was the dollar. Oh my goodness. It's nearly at 100. It is up by 0.8 on the week. The 10-year note is also rocking higher dramatically. So with that said, if you want to know more about my thoughts in terms of how we got here, I encourage you to watch the video the video that will queue up in a moment, which walks you through my weekend prep and the reasons why I am, why I was looking for a potential repeat of 2008. And if we're going to get that, we cannot reclaim the 50 DMA. It has to be down, down, down from here. With that said, thank you for watching. Thank you for always commenting and smashing the thumbs up. And I'll see you guys tomorrow. Thank you.